The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Hi folks, welcome to another edition of Breakout Investing on TFNN. My name is Ken Shreve. Thanks very much for tuning in. A reminder that you can catch my show every Tuesday and Thursday on TFNN from 3 to 4 p.m. Eastern Time. My show is also available as a podcast on iTunes. If you can't listen live, just head over to iTunes, do a search for, Ken Shreve, Breakout Investing, TFNN. You'll find it that way. And don't forget, you can listen to all TFNN programming on your smartphone. Just type in tfnn.mobi in your smartphone browser, and you can get the stream that way as well. I'll be going over some charts, as I always do on my show, and if you want to look at those charts right along with me, just do that on Tiger TV on the homepage of tfnn.com. Channel 1, if you're listening live, and the show is archived channel 13 in Tiger TV. So it's a great feature at TFNN, and new doings with Tiger TV. You can also watch Tiger TV on your smartphone, your iPhone, your Android device, and to do that, just go to the homepage of tfnn.com for more details. All right, let's update my Dow chart here, see where we're at. Got about 50 minutes left in Tuesday's session. Take a look at a chart of the Dow here. Hey, let's call it another resilient performance. Dow right now trading in the bottom half of its trading range, but fairly muted selling pressure, down about 32 points to 12,567. And I wanted to show you a monthly chart of the Dow. When I do technical analysis, I use daily charts and weekly charts a lot, but I think that the story that the Dow's monthly chart is showing is really a pretty bullish one. So let's take a look at the Dow Jones Industrial Average. Let me fix my... All right. Okay. Now you should see a chart of the Dow Jones from a monthly perspective, and you can see the consolidation right here. To me, this looks like a bullish consolidation, and it also tells me that there's a likelihood of an upside breakout here. Now, we've been talking about the fact that there could be, a mild shakeout in this market. It could be going on. Right now the Dow is down or set for its fourth straight decline. Pretty mild pullback up to this point. We could see a little more downside, but when I look at a monthly chart of not only the Dow but the S&P 500 as well, and the Nasdaq, I mean, the monthly charts look virtually identical. Bullish monthly charts that tell me there's a good chance for a breakout here. Now we'll see what happens, but when I look at these charts, and then I look at screens that have some pretty compelling technical setups in individual stocks, it makes me optimistic about this market. And as I mentioned when I guest hosted on Tom's show yesterday, you do have a lot of people saying the market is overbought here, ready for a pullback. And you have to remember, the market is counterintuitive. It often does exactly the opposite of what the crowd thinks. So don't rule out continued strength here for the major averages, but as always, I'm just going to watch price and volume on a daily basis. And if you start to see signs of institutional selling, if you start to see higher volume declines become more prominent, that's be a signal to get a little more defensive. But right now, technical picture of the market looks pretty good. I don't think there's any reason right now to head for the exits and start thinking about taking profits. Okay, so all that set, volume today a little bit higher on the New York Stock Exchange, tracking very close to Monday's levels on the Nasdaq. Yesterday on the New York Stock Exchange, below average volume at 740 million shares. We're tracking right now about 5% higher than that. On the Nasdaq yesterday, volume pretty much average at 1.6 billion shares, and today we're tracking pretty close to that level. So pretty much another average low volume gain for the market. Let's take a look at the Nasdaq Composite here, and we'll pull up the tech index, and we'll see right now that has turned slightly positive, up about 1.5 points to 2813. And finally, we'll take a look at the S&P 500 here. and the S&P 500 is down a meager 1 point to 1306. So yeah, I'm kind of looking at the monthly charts here of the major averages, and they're looking pretty bullish to me. All right, checking crude oil, down 0.3% to 98.48 a barrel. Gold up 0.4% to $1,740.40 an ounce. Check on the GLD here, the Spider Gold Trust. This is an ETF that trades at 1/10 the price of an ounce of gold bullion. GLD right now up 94 cents, about 0.6% to 168.97. So as you can see, it has definitely caught a bid in recent weeks and is working its way higher. GLD is definitely going to face overhead supply as it continues to work its way higher toward that 175 price level. Let's take a look at what the dollar is doing today with gold being up. You'd expect the dollar to be down, but that may not be the case. Dollar is up a little bit right now. This is the UUP, the PowerShares Deutsche Bank US Dollar Index Bullish Fund. It is up 4 cents, 0.2% to 22.11. As you can see, it is still stuck below its 50-day moving average, and it'll probably take a lot. You can see there's been some heavy volume selling in the UUP. And will there be heavy volume buying that eventually lifts it back above its 50-day moving average at 22.34? Of course, that story hasn't played out yet, but the dollar working on a two-session winning streak here, it looks like. Okay, taking a look, news around Apple today. Interesting that they hired a new head of their retail operations. Shares of Apple continued to trade well after its gap up 3 or 4 days ago. Apple right now up $3.19, 0.7% to $456.20. And what the company did, remember Ron Johnson used to head up the retail operations at Apple. He moved over to J.C. Penney. That stock had a huge day. What was it? Late last week. J.C. Penney. Big day for that stock, but Ron Johnson is now the CEO at J.C. Penney. Apple hired a guy named John Browett, who used to be the CEO at UK electronics chain Dixons, and very respected guy in the industry. Dixons operates about 1,200 stores in 13 countries throughout Europe. So John Browett, the new retail guy at Apple, and stock is benefiting on the news again, up $3.19 to $456.20. Taking a look at shares of Netflix today. Of course, Netflix reported really nice earnings. I mean, the earnings report surprised the market. Again, this was late last week, but shares of Netflix under a little bit of pressure today, down $4.45. 3.5% or so. The news here is that British Sky Broadcasting Group, this is a UK-listed company, they announced plans for a streaming service of its own. They're basically going to be launching a streaming service within the next 6 months to challenge Netflix's recent UK launch. So Netflix, as a result, is under some pressure today, down $4.45 to $120.98. I've been asked about Netflix. Is this a stock that I want to own down here? This is another case of just a stock that is so far off its highs, and a stock that frankly has undergone a lot of institutional selling pressure in recent months. It is going to face a lot of selling pressure as it works its way higher. If there's volume behind the move and the company continues to execute and convince the street that it actually has turned the corner and it has made it through the worst of it, it may be able to trudge its way higher. But a big strategy that I use for my Ultimate Growth Stocks newsletter at TFNN is to buy stocks as they are coming out of consolidation areas. And Netflix is certainly not doing that now. It hasn't been doing it in recent weeks. It's come up off a bottom, but the 200-day moving average for Netflix at 175 is probably going to be a pretty stiff resistance level. I tend to buy stocks that aren't necessarily at 52-week highs, but usually within 10-15% of a high. I like to target relative price strength in the market. Netflix certainly showing it recently, but overall not so much. Taking a look at some earnings reports today. Let's take a look at Biogen IDEC, B. I gave a shout out to this company on Tom's show yesterday. Shares of Biogen right now up $1.34, a little over 1% to 117.92. The stock has been really trying to muster a breakout over the $120 price level, and that is over in this area right here. I gotta fix this chart. Apologize, folks, for those of you watching on Tiger TV. Okay, that's better. Biogen IDEC still trying to muster a breakout over that $120 price level. It is trading in the top half of its range today. Stock was under pressure in the pre-market, but is having a pretty good day. Definitely under accumulation headed into today. Earnings kind of lukewarm. I mean, earnings were up 6% from a year ago to $1.51 a share. Sales up 9% to $1.33 billion. Both the bottom line and top line growth came in above expectations, but its full year outlook for 2012 was a little bit below what analysts were looking for. Still, buyers are in the stock today, and technically Biogen continues to look pretty good. I've mentioned recently that expectations are very high for Biogen's oral multiple sclerosis experimental drug. It's in pill format, and that very favorable late stage trial data in recent months, and the company plans on seeking approval for BG12 before the summertime, and that is expected to be a big growth driver for Biogen. I don't think that is priced into the stock, but yeah, we'll wait and see what the FDA has to say. But a very favorable clinical trial for BG12. Also in earnings, let's take a look at Exxon Mobil. That had been under pressure for most of the day. Let's see where it's at. Trading up pretty much at its session low or near its session low. Shares of Exxon Mobil down $1.54. 1.8% to 83.94, still holding above its 50-day moving average at 82.5 thereabouts. Earnings up 6% from a year ago. Sales up 16%. $121.6 billion in revenue ExxonMobil did in the fourth quarter. Just a big company. Obviously, they've been duking it out with Apple recently in terms of the biggest market cap stock award. Apple is in the driver's seat now with a market cap of $425 billion. ExxonMobil recently around 403 billion, but investors not liking ExxonMobil's results too much today. Again, stock down close to 2% to 83.94. We'll see if it finds support at its 50-day moving average around 82.50. Okay, coming up after the close today, earnings season is winding down, but man, I mean, we got a lot of earnings reports after the close this week, the following week. When we come back, we'll take a look and see what Amazon is doing ahead of its earnings report after the close, and we'll also take a look at Fortinet, which is a maker of network security hardware. They report after the close as well. So we'll do that when we come back. You're listening to Breakout Investing on TFNN. We'll be right back, folks.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments. And whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
Would you like to discover the next great tech stock? David White, TFNN's technology guru, has just launched his new newsletter, The Technology Insider. In his newsletter, David will be looking for those shining stars that may turn into the next Apple, Microsoft, or Cisco. David combines his technology background as a software programmer with his market skills as a successful professional trader to give you this unique newsletter. We're on the verge of the next great tech run. With the Technology Insider, you'll be in front of the run-up and not lagging behind. David is developing a long-term investment portfolio, therefore we're only offering the Technology Insider as an annual subscription with a remarkable price of only $395. That's right, for a little over $1 a day, you'll receive the fundamental technology wisdom and technical trading skills of the Technology Insider David White. What are you waiting for? Go to the front of TFNN.com, click on the link on the front page, sign up for your 2-week free trial, and become a Technology Insider today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks. Thanks very much for tuning in to Breakout Investing on TFNN. My name is Ken Shreve, and remember, folks, if you want to give me a call, the number to use is 877-927-6648. 877-927-6648. After the close today, going to be looking at numbers from Amazon. Taking a look at a chart of Amazon in Tiger TV, you'll see that shares are up 51 cents, 0.3% to 192.66 ahead of the results. This is a chart that reminds me a little bit of Netflix. Again, the stock that has suffered a lot of technical damage in recent months, and it has worked its way higher. It has shown some accumulation as the stock has come off its lows. It is still trading below its 200-day moving average here at $202.30. But a lot of bad news may be priced in here. Who knows? Maybe Amazon rallies on the results after the close. Very hard to say how a growth stock is going to respond to earnings. Half the time it's going to go up, half the time it's going to go down. It's hard to make sense of how the market responds to earnings from growth stocks like this. But Amazon's still spending a lot of money that is impacting bottom line growth, so they're expected to earn 19 cents a share. That's going to be down 79% from a year ago. The top line growth, not a problem at Amazon. Sales are seen rising 41% year over year to $18.2 billion. I don't think there's any question that Amazon is probably going to, have good things to say about sales of the Kindle Fire tablet computer, but the company does still have fulfillment costs that it has to deal with in sending out all this product. And the holiday shopping season, I'm sure, was a big one for Amazon. So we'll see what the company has to say after the close, and again, there have been buyers in the stock recently, so we'll see. Shares trading around 192.66, up about 0.3% ahead of the results. Take a look at Fortinet here, FTNT. They also come out with earnings after the close. This is a maker of network security hardware. I think they do software too, but stock is trading right at its session high right now, up 56 cents. That's a pretty big percentage gain, up 2.5% to 23.05. I remember listening to this company's conference call in I think it was in October. They were talking about how demand was very strong for the company's products, but the stock has been struggling of late, so we'll see if the earnings this time around are going to be good enough. You can see it is kind of still deep inside a base. It is trading above its 50-day moving average. This is another stock. It's too far off its high. I'd like to see, for Fortinet, for me to consider buying it, it's going to have to get, much closer to that, $24, $25, $26 level, and then, maybe then you see a base breakout after that. So earnings at Fortinet expected to be up 9% from a year ago to 12 cents a share. Sales up 25% year over year to $116.5 million. Also after the close today, we'll take a look at Broadcom here. Chip stocks, continue to do well here. Some of the chip equipment makers have been on TV recently talking about how the industry has bottomed. So sentiment still seems to be pretty positive, whether you're talking about the chip equipment makers or the chip makers. Broadcom, as you can see, has rallied nicely in recent weeks ahead of the results. The stock today is up 7 cents to $34.52. So we'll listen to what Broadcom has to say after the close. Growth is not expected. Earnings expected to be down 13% from a year ago to 65 cents a share. Sales down 7% to $1.8 billion. But this is another large cap tech name that has definitely been under accumulation in recent weeks as investors maybe bet on a better than expected report. So we'll see what Broadcom has to say. And finally, here's an interesting company also set to report after the close today. Little known Jack Henry and Associates. Jack Henry and Associates. And I bring this stock to your attention because, technically it's a very strong stock here. Jack Henry, here's a look at a daily chart. Stock is up 4 cents to $34.34 ahead of the results. Switch over and take a look at a weekly chart for Jack Henry. I think I have one here. There it is, Jack Henry and Associates. And yeah, this stock could be on the verge of coming out of a big long base here. Let me just get that. Here we go. For those of you watching in Tiger TV, okay, there's Jack Henry. Could be in the process of coming out of a big long base. Jack Henry makes integrated data processing platforms that basically manage transactions for financial institutions. So we'll see what Jack Henry has to say. Decelerating sales growth in recent quarters, a bit of a yellow flag, but technically pretty strong ahead of earnings. You're listening to Breakout Investing, folks, on TFNN. We'll be right back with some economic data.
Folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes a carefully selected portfolio can lower your volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angelo O'Brien, financial advisor and certified financial planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about technical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks. Quick check on the markets here. About 25 minutes left to go in Tuesday's session. We have the Dow, actually all the major averages rallying into the close here. Good to see. The Dow right now is down about 13.5 points to 12,567. Move over, take a look at the S&P 500, and we'll see the S&P 500 is almost break even, down not even 1 point, fractionally, to 1306. Right now, the Dow and S&P 500 are working on 4-session losing streaks, but we'll see if we can turn positive here in the next few minutes. But selling in both the Dow and S&P has been fairly well contained over the past 4 trading sessions or so. And finally, last check, the Nasdaq had turned positive, so take a look at the Nasdaq, and we'll see that it is higher by a meager 1 point, but still another strong performance for the tech index today, up just over 1 point to 2813. Economic data today, not a busy day of economic data. We had the Case-Shiller 20-City Composite Home Price Index. That dropped 1.3% in November, its third straight monthly drop. Year-over-year, prices are down 3.7%. But let's take a look at the ITB. This is an ETF that tracks a lot of home builders. The iShares Dow Jones U.S. Home Construction Index. It's under some pressure today. You had a nice breakout in the ITB over this $12 level, back here in December. Technically still is fine, under some selling pressure lately. It is taking a hit today, down 23 cents, 1.7% to 13.09, but still holding comfortably above its 50-day moving average, which happens to coincide with its last breakout point, the 50-day line right here at 12.07, and that pretty much is, again, the last breakout point for the ITB. Some stocks, some of the top holdings in ITB are DHI, which is D.R. Horton. This is a highly respected home builder out there, and we'll see that D.H. Horton under a little bit of pressure today after it's been a super strong price performer, though. You can see the nice uptrend it's been on. Shares of D.R. Horton down 1.2% today to 13.91 amid soft housing prices, and also Lennar is a top holding of ITB. We'll take a look at shares of Lennar here and see that it's taking a little bit bigger hit than D.R. Horton. Shares of Lennar down 67 cents, 3% to 21.47. It is also holding above its 50-day moving average. So a lot of price strength in the home builders lately. They have been running higher, so wouldn't be surprised to see some consolidation in the group. But if these are truly going to be leadership stocks in 2012, what you'd expect the home builders to do is firm up at their 50-day moving averages. So again, with Lennar, the 50-day line is at 1980. It's at 21.47. So if it does continue to pull back, and this stock truly does have leadership potential in 2012, you'd expect it to find support at the 50-day. Also had the Chicago Purchasing Managers Index earlier today. Kind of a disappointing reading there, although this is not a major piece of economic data. It comes ahead of the ISM Manufacturing Index. It always comes out one day ahead of the ISM Manufacturing Index, which is probably a little more closely watched, but the PMI came in at 60.2, down from 62.2 in December. And finally, kind of a surprisingly disappointing reading in consumer confidence from the Conference Board. Consumer confidence dropped in January, down to 61.1 from 64.8 in December. The estimate was for an increase to 67, so it came in about 6 points below what was expected. Rising consumer confidence has pretty much been the norm in recent weeks, so a surprisingly weak reading from the Conference Board earlier today. Coming up tomorrow, we've got the ADP employment change ahead of Friday's jobs report. This is private payroll growth, which the ADP employment change measures. Private payroll growth is expected to be right around 200,000 in January compared to 325,000 in December. We'll also get the ISM Manufacturing Index tomorrow as well. Thursday, weekly jobless claims, they should be right around 375,000, down just a tad from 377,000 in the prior week. And then the big daddy of them all, the non-farm payroll report for January. Job growth right now is expected at 155,000 after 200,000 growth in December. So that's it on the economic data. As we continue with this edition of Breakout Investing, let's take a look at some movers in the market today. I wanted to take a look at Centene, CNC, on the New York Stock Exchange. This is a stock that continues to trade very well. It is outperforming again today. Didn't see any news. Up $1.28, 2.9% to 45.03. Trading up near its session high. Some pretty good volume too. Centene is a provider of managed healthcare services through government-subsidized programs like Medicaid, for example. I wanted to show you Centene, though, because, this is an example of an extended stock. And you're going to hear me talk a lot about extended stocks on Breakout Investing because, a common pitfall when you buy growth stocks is to buy them too late. And if you're thinking about buying Centene up here because it's moving higher in heavy volume and because the stock has been under, a fair amount of accumulation of late, it is flat out just too late to buy up here. It recently broke out over the $39 price level. I would call the last swing point right in this area right here. Let me fix the chart here. All right, here's Centene. So you can see the strong uptrend that the stock has been on, holding comfortably well above its 50-day moving average at 40. The last swing point again was right around 39, and that's probably back in this area here in early December, where it broke out, moved sideways, and then continued higher. So you don't want to chase a stock when it moves too far past a swing point. You may get another opportunity to buy Centene. Maybe it comes down to its 50-day moving average, but I would not chase it up here. Another name I like very much, it used to be a former holding in my model portfolio. I took some profits not too long ago, but hey, you know what? Sometimes I go back into these stocks. I'll sell them and then revisit them at a later date. Still like the look of Nuance Communications here, especially in light of what Apple had to say in its earnings report last week. Nuance its technology is behind Siri in the iPhone 4S. It's a company based in Massachusetts, a mid-cap name, not a small company by any means, but voice recognition technology, not only in smartphones and handheld devices, but also in autos, and they also have a presence in healthcare. When doctors are transcribing notes about patients, things like that, you'll see Nuance's technology in the healthcare space as well. But Nuance right now up 9 cents to 28.47. Really strong company here. They're going to be coming out with earnings. No official earnings date, but it should be next week, around February 9th, maybe a little bit before, a little bit after. But I do have. Let's see. I don't know if I have a stored chart here for Nuance. I think I do. Hold on, because I put a chart of Nuance for putting its 20-day moving average on here. Let's see. Where are you, Nuance? Here we go. Okay, here's a look at Nuance with its 20-day moving average plotted, and you can see the stock is trying to firm up at that price level. The 50-day moving average down around 25.78, 26 thereabouts, showing price strength, still holding near highs. Can't rule out a breakout in this name either. Again, Apple reported strong earnings. Expecting to hear pretty strong numbers from Nuance when it reports on or around February 9th. Earnings expected to be up 29% from a year ago to 36 cents a share. Sales up 22% to 386.2 million. Also continued to be impressed here with F5 Networks. Let's take a look at F5. F5 Networks is down about 27 cents today to 119.83. Really like how it's holding on to all of its gains after its earnings-inspired gap up recently, just moving sideways, showing very good support. So like the way F5 Networks is trading here, and not out of the question that we could see a new entry point in this name as well. All right, I want to talk to Joe in Boston on the line. He's got a question about Cubist Pharmaceuticals, CBST. How you doing, Joe?
Good. You, Ken?
I'm doing fine.
Never miss a show. Good job. Appreciate it.
Yeah, I appreciate that. How are things in my old stomping grounds, Boston?
Great. No, we have a very mild winter, so it's good.
Good for
you. We'll be able to get out and golf early.
Oh, good. Like the sound of that.
Two questions. First is this a base on base? And then that was the first part of the question. The second part is, would you consider the move on 120, would that kind of get you concerned?
Okay, let's take a look at Cubist Pharmaceuticals. Its key drug is Cubicin, which is an antibiotic. I like Cubist as a stock that gets high ratings from IBD in terms of fundamentals and technical. So let me just pull up another chart here for Cubist. And you're talking. Now you were talking about a decline. What was the date,
120.
Joe? January 20th. Yeah, pretty significant day of distribution in the stock, a high volume decline. You know what? I'm not overly concerned about that. It is good to see the stock firm up at its 50-day moving average. I would say that Cubist is. It does look like a base-on-base pattern forming. If you go back on the weekly chart, though, This is actually maybe not, because its very first consolidation started back in late May. Are you looking at a chart?
Weekly. Yeah.
Okay. Let me pull up a weekly here for Cubist, because I'm looking at a daily right now. I'm going to pull that up for Tiger TV. Okay. Let me just get this right here. It looks like Cubist on the weekly chart that the first base started in late May, okay? And then you had a breakout in October, right, in this area here. And then it came down, and then it tried to break out again over the 40-49 price level, and it did. So that is really the base on base pattern that formed there, and now you've got Cubist kind of firming up at its 10-week moving average. So to me, the stock still brings a lot to the table. I don't know if they did come out with earnings, it looks like. I kind of lost track of this one. They just reported not too long ago, I don't think. But it looks to be firming up at its 10-week moving average. And let me just put the 10-week lines here on the charts for those watching in Tiger TV. Just bear with me here. All right, there we go. Yeah, so I mean, the bottom line is that it is a stock showing relative price strength. Overall, I'm still optimistic on this market. Still looks to me like it's it's within buying range here. So it seems like a stock. I'm not really seeing blatant signs of distribution outside of that distribution week a couple weeks ago. Still hanging in there pretty well. There's a lot of biotech stuff working. I'm sure you know. Celgene is looking good. There's a whole bunch of them. But I would put Cubist on that list of biotechs that continue to look pretty good here.
Okay. Thank you, sir.
All right, Joe, take care.
Right.
Talk to you soon. Thanks.
Bye.
Yeah, Cubist Pharmaceuticals, one of several biotechs working nicely in the market. Viro Pharma is another one. VPHM kind of had disappointing price action in Jazz Pharmaceuticals yesterday. It tried to break out, reversed, but this is another bio or drug maker, I should say, that they make a drug that treats narcolepsy, Xyrem. Big growth at this company as well. But you can see the reversal for Jazz yesterday, and give this one some time to work. It is a stock that is showing signs of accumulation, and if you're long, no reason to give up on it yet. So Jazz Pharmaceuticals, disappointing price action yesterday, trading up near its session high today, down about 27 cents to 46.49. But biotech continues to work very well here. All right, let's move on, take a look at some other names. Talked about Nuance Communications, still looking good here, ahead of earnings next week. F5 Networks continues to trade pretty well. Let's take a look at Priceline. Priceline was making a nice move today. It's a high-priced stock, so percentage-wise not all that big, but still shares of Priceline trading up near its session high. Up $8.38. That's good for a 1.6% gain to $530.79 a share. Let's move over and look at a weekly chart for Priceline. And Europe has definitely been an overhang for Priceline. The company does a lot of business there, but Priceline right now has just basically been moving sideways for forever. It's a former bull market leader that could try to break out here, but we'll have to see. More on Priceline when we come back. We're headed into a break now, so stick with us. We'll be coming right back in about 2 to 3 minutes. You're listening to Breakout Investing on TFNN.
Folks, this is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this traders market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com under newsletter. Hit the Market Insight tab for your 2-week free test drive right here, right now.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
At Tiger Metal Exchange, we pay you more for converting your jewelry to cash.
Let's go to Brian in New Jersey. Hey, Brian, what's going on?
Hey, Tom, just want to let you know I did give you some jewelry. My jeweler offered me about $650. I should get a check in the mail tomorrow for about $1,200.
At Tiger Metal Exchange, it's all about honesty when converting your jewelry to cash.
Okay, let's go to Paul in Florida first. Hey, Paul, what's going on?
I want to commend you on the Tiger Metal Exchange. I just did a deal with you guys the other day.
Oh, good.
I'm very happy.
Well, I appreciate it. Now, Did you sell us jewelry or did you buy coins off us?
Yeah, I sold you jewelry.
Okay.
Yeah.
Awesome.
What we weighted at was less than you guys said, so, you're totally honest.
At Tiger Metal Exchange, we give you the tools to value your gold, and it's absolutely free. Call 866-618-8888 or log on to TigerMetalExchange.com. We've created the easiest, safest, and most honest cash for gold process. Tiger Metal Exchange. It's the only call you need to make.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, as we head into the close here, put the finishing touches on Tuesday's session. Right now we have the Dow down about 25 points, 12,628. Nasdaq hanging in there, slightly positive, up a little better than 1 point to 2813, and the S&P 500 down fractionally, make it 1 point now to 1311. Before we went into the last break, just talking a little bit about Priceline. Stock is outperforming today, up 1.2% to 528.84. But what I want to say about Priceline again is you go back since the start of the last bull market in March 2009, and Priceline was certainly one of the big leaders. Now, if we are indeed in the early stages of a new bull, and a good argument can be made that we are, the new leadership is going to come from different stocks, by and large. Some stocks that led during the last bull market will continue to lead, but they'll be in the minority. So, my take on Priceline is that chances aren't good that it's going to be a new leader, because it already led starting from March 2009. It was a big leader over the past 2.5 years. The stock has been moving sideways. If you're watching on Tiger TV, you can see the sideways movement in Priceline since basically May 2011. So a big long base forming here. Not out of the question that it could try to break out. Its earnings are upcoming right around mid-February. No official earnings date yet, and this is a fast-growing company. I mean, it's got a market cap of $26 billion, but the company just continues to grow huge. Again, Europe has been an overhang, but if the perception is that Europe is getting its financial house in order, maybe things aren't so bad at Priceline in terms of growth in that area of the world. But earnings expected to be up 48% to $5.04 a share. Sales up 32% year over year to $965.7 million. So we'll keep an eye on Priceline. Buyers have definitely been coming into the stock ahead of earnings, so we'll see what happens there. Let's take a look at BE Aerospace. That's BEAV. BE Aerospace. This stock has been trading very well. It reports earnings tomorrow before the open. Shares are up 7 cents to $42.24. It's in this aerospace industry group is a strong one in the market. A lot of stocks acting well. TransDigm Group, TDG, among others. Good breakout in that name recently, but I'm expecting pretty big numbers from BE Aerospace before the open tomorrow. Let's take a look at a weekly chart. And you can see a nice long base forming for BE Aerospace, and really a stock that could be on the verge of an upside move here. So we'll see what the company has to say tomorrow morning. Earnings expected to be up 81% year over year to 56 cents a share. Sales up 21% to $655.6 million. BE Aerospace basically makes aircraft interior products, seats, beverage carts, things like that. So they do a lot of business with Boeing, but a good-looking stock here. So I'll move on and take a look at Commvault Systems. Commvault Systems, storage management software is the story here. This is another stock that is setting up. A little concerned about that big high-volume decline back in late December. But we'll see what Commvault has to say. This is another stock that pretty decent fundamentals here, still holding above its 50-day moving average. Shares of Commvault down 50 cents, 1% to $47.48 ahead of the results. Earnings at Commvault tomorrow morning expected to be up 14% from a year ago to 25 cents a share. Sales up 20% to $100.5 million. Busy day of earnings tomorrow as well. After the close Wednesday, Chipotle, Green Mountain Coffee Roasters, Las Vegas Sands, Qualcomm, Tractor Supply. Busy day. Thanks very much for listening, folks. Coming up next, the Tom O'Brien Show on TFNN from 4 to 6 p.m. Eastern. Have a great afternoon.